Hello, master traders and money magnets. Looks like the SPY gave us another lower low, guys, and we officially closed below that 200 daily moving average. As of yesterday, it was around the 572-ish level. SPY managed to close at 560.5, right around my 1.382 fib level. Now we're gapping up a little bit here, okay? Can SPY finally get a bounce? I tell you guys this. When I see bearish price action like this, the bounces that come is no telling when they come. But when they come, it's usually very violent, like a short squeeze type of bounce. You guys seen those short squeeze type of bounce? It's very violent to the upside and lots of money can be made, okay? So I tell you guys, if you're going to play a counter trend trade, that's the one to play when we finally get that short squeeze bounce. And it usually starts with the false breakdown setup, okay? So we got to figure out what levels that we need to watch. As far as yesterday's price action goes, I missed the first couple of hours. I had to take my son to his appointment. But I did, before I left, I did write the general lean for my Discord members. And I wrote here for SPY. Multiple levels must clear for SPY to be bullish again. But for today, the 200 DMA, daily moving average, around the 571.6 level, is the equilibrium level. As long as below, more downside is possible. If cleared, a bounce is possible. From here, resistance are at 570 and 571.6. If they clear the resistance at 570 and 571.6, if they clear 573, 575 and higher targets will be in play. If below the 200 DMA and 570, next support is at 568, and if it fails, 566.5, 565, all the way down to 562-ish would be in play. That's what I wrote. And we look at the price action on the 15-minute chart. That yellow line I have right there is the 570 level. You guys can see the first candle at 9:30, it bounced around my 566.5 level, cleared 568, and came just shy of hitting that 570 level before giving us the most amazing trade setup of all time, the false breakout setup. Bam! False breakout. Got people excited. False breakout setup. Trade with the traps. Broke back below 568. Broke below 566.5 and just started pushing price lower. One of the most important parts for me was when it back tested 566.5 as a resistance. Because a lot of people ask, how do we know it's not a false breakout or a false breakdown? Well, you look at here when we had the breakdown on the 10 o'clock candle, and then we look at the 11:30 candle on the 15-minute chart, how it back tested at 566.5-ish area and rejected, confirming that the breakout we had, the breakdown that we had at 10 o'clock was legit. And then when we look after that rejection, when we look at how it broke below the 563.5 level, showed continuation, rejected 566.5, broke down 565, broke down 563.5, and it just continued pushing downwards until we had a nice little bounce at the end of the day, right? At this case, how do you close out your position? Like I always say, you want to play it level to level. Once you get in a position, you play the false breakout or you play the breakdown. You want to play it level to level. You take most profits at the next level, and then you leave a runner. And when you're in runners, I usually put on the trailing stop loss. Put on the trailing stop loss, okay? And let the trailing stop loss babysit your runners for you. It'll take care of it automatically. 10%, 15%. you know, whatever how you set up your trailing stop loss, it'll guarantee that you'll take profits around that area. Okay? Once you're in runners, set up your trailing stop loss, and your trailing stop loss will take care of it for you, whether it's to exit or keep holding. But yeah, that's pretty much how we traded once again using the levels, 15-minute chart. The question now is, what's the next plan, and is there a bounce incoming? Well, we have CPI tomorrow, but today is the day before CPI, so I'm wondering if anything's going to happen. I tell you this, SPY, every time SPY did bounce, it's only been able to bounce for one day before dropping again. So that's also a sign I'm looking for, is if a SPY can bounce for more than one day. And if today is one of the bounces, we have to look at resistance level. I have resistance level at 563.5, 565, and the fib level at 566.4. Okay? If we are to get a bounce today, a green day, we need to see those levels recaptured to try to back test the 200 daily moving average, which is all the way up as of now 572, but it might slope down a little bit. Okay, as far as like being bullish and favoring a multi-day relief bounce, the recapture of the 200 daily moving average would definitely be needed. Okay, a false breakdown of the 200 daily moving average would definitely be a good buying opportunity. We'll see, but usually it's not. It doesn't happen often, but a recapture of the 200 daily moving average usually a bullish sign. So that's where the level is at. Those are the levels to watch if we are to get a bounce today above the 200 daily moving average. I would favor a multi-day relief bounce to the upside. Okay, watch out for a possible short squeeze. Could happen today or tomorrow, but I think the SPY would definitely need a catalyst. Okay, that's the bull case scenario. If we are to continue to be bearish, first of all, staying below the 200 daily moving average is a must. Okay, we could get some back test, some bounce to back test the 200 daily moving average as a resistance. And if it holds as a resistance, that is your sign that yesterday's breakdown stays intact. Okay, so watch out for potential back test. But if we do not go for a potential back test as a resistance and SPY just want to head down lower, then the support levels to watch are 562. I have a fib level at 560.8 and then 559. To put lower targets in play, I have a fib level of 556.4, then 555, another level of 552, and 550 below. All right, guys. So like I said, if we are to get a bounce today, 563.5, 565, 566.4 fib level must recapture to put a back test of the 200 daily moving average in play. And above the 200 daily moving average, I would favor a multi-day relief bounce to the upside. Okay? Bearish case scenario, if we do not get a back test or a bounce, more support levels must fail to trigger more puts or give you that sign to continue holding your puts or short. And that would need 562, 560.8, and 559 to fail as support. Triple Q, I have a fib level support at 474.2 and then a minor support at 473. Okay, those levels fail, more downside incoming down to 470, 468.7, 467-ish or lower incoming. Okay, if we are to get a bounce, some type of relief bounce, then I have resistance at 477 and the fib level at 479. If they recapture a bounce up to 481, 482.5 and the fib level at 484 would be in play. A recapture of 484, I would favor a multi-day relief bounce, at least to backtest the 200 daily moving average and also the 490 fib level. All right, but it would start by clearing and recapturing some lost levels like 477 and 479. Otherwise, if we break down 474.2 and 473, more downside incoming. Tesla has just been looking nasty, super extended to the downside. It It's almost filled the gap. We had a gap back from October 2024. To fill it, 213.6-ish to the 212 area would definitely fill the gap. Tesla didn't quite get there, but got very, very close. As of right now, though, it's around 228-ish in the pre-market. So I have support at 227. I'm going by buy and supply zone at this point because the price is too extended for me to use fib levels. So I'm going by previous buy and sell zone. And I do have a level at 227. If Tesla wants to send us back to the downside, send us lower, 227 must fail to put 224, 222, 220, and 217 all back in play. Below 217, I would favor the gap to get filled. Like I said, it was around 213 to the 212 area. Okay, if this is not a gap in crap and Tesla wants to give us a relief bounce, 230 must clear, 232 must clear, and maybe that'll give us a nice bounce up to 235, 237, and 238.6. That's a previous, buy zone that we lost back in November 2024. We lost that yesterday, so we can recapture that. That would be pretty nice for the bulls, at least for the short term, and send us back up to 240 plus. All right. NVDA looking bearish as well. Yesterday, it did hit my 1.236 fib level around 105.8-ish. Pause there. Didn't quite break it down, but if it wants more downside, 107 and 105.8-ish must fail as support to put 104 or lower in play. I have a fib level around 101.3. I have a level at 100. Another fib level at 97.8. 96 and 94.2 all in play to the downside. All right. If we can lose that 107 and 105.8 level. Now, if it's bounce time, resisting at 109, 111, and a fib level at 113 must recapture to set us higher. We have a gap around 117-ish, fib level around 190, 119 plus. Those will all be in play, but we must recapture some lost level and clear it. 109, 111, and 113 are my resistant levels. IWM looking very bearish, and if it wants to continue to look bearish and give us more downside, 202, 200.8, and 199 are support levels. They fail. 197 or lower incoming. If we are to get a relief bounce, resistance at 203.6. If it clears 205.6, 207.5, and the fib level at 210 would be in play. Above 210, I would favor a bigger relief bounce. Remember, even when it's bearish, we get those counter trend moves, those relief bounce, they can be violent. So just be very careful and trade it sheep style. Apple looking pretty bearish, guys. It's trying to gap below the 200 daily moving average. Got to watch out for that. It's around 227-ish. It's below that. So if bulls want to get a bounce and avoid more downside, 227 and a fib level at 228.4 must clear and recapture. And that would be bullish. Putting 230 or higher back in play. If it stays below 227 and support at 225 fails, bearish. With 223, 221.5, 220 or lower incoming. All right. Amazon looking bearish as well. But if it wants to get a bounce going, it needs to stay above the fib level of 195.5. Clear 197 and 200 to recapture the 200 daily moving average to put 203, 206, and 210 in play. If it's below 195.5 and 194 fails, guys, we are dropping a lot lower down to 190 or lower incoming. Microsoft, it broke down a fib level yesterday, which was around 381. It's trying to gap above it. So the 381 fib level is today's equilibrium level for Microsoft. If it fails, if it's below, guys, it's bearish. Yesterday's breakdown stays intact. 379, 377, 375, and 373 will all be targets and next support level. If it manages to stay above 381 and we clear 383, We can get a bounce 384.5, 386, 387 plus would all be back in play for Microsoft. Where's that 200 daily moving average? It's way above there. So yeah, Microsoft is very bearish. But we got the fib levels to help guide us. And if we can clear those levels above 381, clear 383, 384.5, we can get a bounce. Below 381, more downside incoming. Meta looking very bearish as well. But if it wants to get a bounce going, 603 and 605 fib level must clear to put 609, 613, 617, 618.5, and 620 all back in play. I'm overall bearish below 605. Next support level is at 601 and 559. If those levels fail, 595 or lower incoming. We could drop all the way back down to 587 or lower. Definitely would be possible for Meta. DXY looking very bearish here. Remember we talked about that triangle structure? Yeah, I had a false breakout setup there. You guys see when we zoomed out. And when we zoom in, it's getting very close to a macro level fib level, which is around 103.1-ish. All right. Now we're talking macro level fib levels. I have a fib level resistant at 105.3. If DXY wants to look bullish again, it'll have to clear that level. Otherwise, could be consolidating to break down 103.1. If it does, DXY is dropping a lot lower. Coin also dropping as well. Let me get us some shorter term fib levels. So we'll go with the low from January 13th to the pivot high of January 24th. Yeah, we can see we have a resistance level around 187 and 188.5. If those levels clear, 193 or higher incoming. Maybe it'll get back to 200, but it would need to clear 187, 188.5, and 190 to get us higher. All right. Otherwise, if we break down one support around 185 and 183, more downside definitely incoming. I have targets around 179, 177, 175, and 173.6 would be downside target. Here is the VIX. Is it trying to pull back? Maybe, but I do have support at 27.3 and 26.4. If those levels can fail, then maybe we can go for a pullback down to the 5 daily moving average around 25-ish. And then I have a critical fib level at 22.5. But overall, if 26.4 can hold that support, 27.3 is tested now. But if these levels can hold, we could be consolidating for some higher highs for VIX. I have the next resistance level at 28.6 and 30. So those levels clear, more upside incoming. All right. Thank you guys so much for watching. I appreciate you guys for being here. Remember, you guys are master traders. You guys are money magnets. Money flows to you guys easily and abundantly. Keep your eyes on the price action, and the money will keep its eyes on you. Peace.